In September 2024, Amazon posted a memo announcing a back-to-office shift. After almost 5 years of remote or hybrid work, company management decided that the shift would foster collaboration and increase productivity. This bold move has stirred the corporate world, and the reactions vary greatly. But has Amazon kicked off the global trend shift, or is remote here to stay? Hi, I'm Medovoi, founder and CEO of AltexSoft. Today we'll talk about how remote work, digital nomadism, and workations impact the short-term rental market. We'll discuss if this trend is still strong post-pandemic and help you decide if you should consider investing in STRs. Before the pandemic, only around 5% of US employees work from home, around 7.3 million people. Remote work was not a norm but more of a perk, often reserved for freelancers, tech companies, or those in creative industries. Then COVID-19 hit. Businesses had no choice but to rapidly shift to remote operations. In 2020, work from home accounted for about half of the work hours in the US. The results were mixed. It all came down to how things were set up and the kind of work culture companies had. Some businesses found it tough because culturally staff wasn't ready to work from home. The ones with high staff turnover struggled the most. We all know what a pain remote onboarding is. Yet, many companies did great with remote work because they were already set up for it and had a flexible way of doing things. The ones that fostered responsibility, accountability, and independence saw a rise in productivity levels. Employees enjoyed the new reality as it gave them flexibility, autonomy, and less commuting. Companies benefited too, saving costs as a result of downsized office space. Of course, it was somewhat balanced by higher onboarding and retention costs. The rise of remote work has fueled a parallel trend, the surge in digital nomadism and workations. The line between the two is pretty blurry. Workations are usually shorter, like a few weeks or so. Meanwhile, nomadism is more of a lifestyle, with workers traveling for months or even years. Whatever the name, people realized they were no longer tied to a specific location for work. In 2020, the number of digital nomads increased by almost 50% to nearly 11 million people in the US alone. And as it always happens, the market reacted to the change in consumer needs. Let's zoom in on the STR sector and see what was happening there. As all of us remember, severe restrictions limited travel opportunities. The entire lodging industry suffered a lack of demand, short-term rentals included. The global revenue of hospitality businesses was slashed by around half. However, some rental properties reported that at that difficult time, digital nomads basically replaced traditional leisure visitors. Booking longer stays, they generated stable occupancy and revenue flow, even off-season. Airbnb also noted that the number of reviews mentioning remote working or work remotely had nearly tripled since the start of the pandemic. Its survey showed that 60% of long-term guests were working or studying during their stay. Then, as the world gradually recovered and travel resumed, it became obvious that the booking patterns changed. In 2021, Airbnb reported that the demand for longer-term stays almost doubled compared to 2019. Instead of a one-off activity, people started to see travel as a lifestyle. So no wonder short-term rentals and related startups thrived. Vacation rental marketplaces, property management companies, software providers all enjoyed increased demand, revenues, and investor retention. As I mentioned in my previous video about travel tech investments, the STR segment attracted significant venture funding in 2023. Collectively, $676 million was raised, over 18% of the entire travel tech funding amount. So, how about now? Is remote work here to stay, fueling further STR growth? Or will more businesses follow Amazon's example and send employees back to the office full-time? The fact is that the approaches vary greatly. Some companies have gone all in on remote work. Spotify says its employees are not children and are free to work from anywhere. Atlassian has been a distributed company since its founding and still supports the Team Anywhere approach. Shopify proudly declares it's digital first, so office centricity is over. And the list goes on. These companies believe that remote work attracts top talent globally, enhances employee satisfaction, and reduces overhead costs related to office space. Conversely, some organizations have pushed for a return to the office.
You must return to the office or else. Workers, could you please return to office? You must come in the office 3 days a week. Corporate America, return to office, take 28.
The aforementioned Amazon, as well as Dell, UPS, and Salesforce, now want all hands on deck full-time. The pros of this approach are obvious too. Leaders at these companies argue that company culture, mentorship, and collaboration thrive in physical workspaces. They believe that remote work, while effective during a crisis, cannot replace the value of physical office interactions in the long term. However, most companies are somewhere in between. Big names like Apple, Walmart, Microsoft, Meta, Google, and many others practice a flexible hybrid approach, wanting employees in the office 2 to 3 days a week. So, what does the future hold for remote workers and the STR market? On one hand, studies show that 4 out of 5 CEOs believe that remote work will be dead over the next 3 years. On the other hand, many companies obviously benefited from cost savings, productivity gains, and employee satisfaction. Plus, remote work is now a sought-after model for 73% of tech specialists. As the Wall Street Journal put it, a flexible model is the new sign-in bonus. So we can't know for sure what the future holds. One thing we can be certain about is that we won't get back to that 5% pre-pandemic level. Remote and hybrid work models are here to stay in one form or another. We also have to be mindful about economic cycles. When there is a weak labor market coupled with high unemployment rates, companies can have more restrictive labor policies. Conversely, when the labor market is tighter, workers can expect more perks in their contracts, and work from home is one of them. But how about digital nomads? Will the trend continue? Well, studies show that after the spike during the pandemic, the number of digital nomads keeps growing, but at a slower pace. In 2024, 18 million people in the US described themselves as digital nomads, which is around 11% of the workforce. Global numbers are harder to calculate. Estimates vary from 35 to 80 million people. To understand it better, if digital nomads were a nation, its population would be comparable at least to Saudi Arabia's, or the UK's, depending on the estimate. Well, whatever the real number is, all studies agree that it's growing steadily. And the aspiration is there too. When adult Americans who are not digital nomads were asked if they plan on hitting the road over the next 2 to 3 years, 21 million said yes, and 41 million said maybe. Of course, not all of them will do that, but the interest in such a lifestyle is evident and it can fuel the trend in the future. So how can we as investors capitalize on this trend? Let's look at some opportunities. Digital nomads comprise a sizable group of better-than-average earners. Their average monthly budget is estimated at around $1,900. So collectively, they spend almost $800 billion annually at the most conservative estimates. That's comparable to the GDP of Poland, nothing to sneeze at. So where does the money go? Well, clearly a big chunk of it is spent on accommodation. Nomadic workers seek home-like lodging for weeks or even months at a time. So traditional hotels like Marriott and Hilton offer extended stay packages to cater to remote workers. Short-term rentals, co-living spaces, and marketplaces like Airbnb also reap benefits of this trend. Let's take a closer look at their performance. The global short-term rental market has already exceeded pre-pandemic levels, reaching a collective revenue of $100 billion in 2024. The forecasts assume the annual growth rate to be around 4.6%. So the STR market revenue is expected to reach $125 billion in 5 years. Of course, it greatly depends on the location. Key data shows that STR revenue in the US has been decreasing slightly over the last few years. That is likely because many people invested in rentals after the pandemic demand surge, and now the increased supply drives occupancy levels down. Meanwhile, Europe is experiencing record high demand, boosting both occupancy and revenue. Destination strategy also plays a role here. Many governments worldwide launch programs to attract remote workers or expats. Some examples here are the Estonian digital nomad visa or tax policies of Portugal and Dubai. As a result, cities like Lisbon, Mexico City, and Medellin are seeing an influx of foreign remote workers, which is driving demand for high-quality short-term rentals. Now, let's take a look at some of the company's results to see a clearer picture. Airbnb, the segment's largest business, reports increased earnings. Its financials disclose its revenue growth that lures many investors into buying its shares. In 2023, it almost reached $10 billion in market share, up from $3.4 billion just 3 years prior. Smaller hospitality startups are also performing well. For example, AnyPlace, a marketplace that helps digital nomads book furnished apartments, nearly doubled its valuation after just a year in business. But it's not only accommodation. There is a lot more than meets the eye. For example, one of the biggest issues digital nomads struggle with is loneliness and lack of connectivity. In addition, the nomad newbies often find organizing logistics quite challenging. A number of companies address these needs. Travel planning and community. From the curated community of a Wi-Fi tribe to professional development programs of Hacker Paradise to spiritual experiences of Unsettled, all of them create tailored itineraries, take care of organizational issues, and give remote workers a sense of belonging to community. Another product offered to digital nomads is travel insurance. For example, Safety Wing provides global health insurance on a subscription basis. Last year, it reached an ARR of $24 million and closed the Series B funding round at a post-money valuation of $195 million. Various startups cater to other needs of digital nomads and remote workers: financial services, gear rentals, payrolls, telemedicine, HR, not to mention project management, collaboration, and communication tools. We'll remember how Zoom skyrocketed during the pandemic, becoming a household name virtually overnight. From remote work tools and co-working spaces to insurance and travel solutions, the startup ecosystem is buzzing with opportunities to support the digital nomad lifestyle. You never know where the next unicorn is hiding. So is it the time to invest? Of course, I'm not here to give financial advice. We can only examine the numbers and speculate on potential future developments. We see that the global workforce landscape has changed. The pandemic showed that businesses can function and sometimes even thrive with remote teams. Employees too have come to appreciate the flexibility and autonomy that remote work affords, with many choosing to leave jobs that don't offer such options. So remote or hybrid work models are likely here to stay. Yes, some companies will follow Amazon and get people back to offices, but definitely not all. And remember about economic cycles. When the market is worker-driven, companies have to add perks to their job packages. The number of digital nomads also keeps growing. It's not skyrocketing, but the steady growth is clearly visible. So we can assume that in the long run, we will see a substantial increase in this category. Short-term rentals, inventory marketplaces, technology vendors, all of them can profit from the remote work upswing. So the potential is definitely there. But be sure to consider market geography, demographic factors, and the current stage of the economic cycle to make the most effective investment decisions. Let us know in the comments what you think about investing in short-term rentals and other companies that cater to remote workers. And stay tuned for more videos on travel investments.